Thank you very much indeed. Why don't you take a seat, and I'm going to invite the rest of the panel to come on stage, give them a chance to introduce themselves, and in the meantime, I'm going to ask that we bring the QR code up for Slido, because I always say when we prepare for these sessions that it's great that these guys have got lots of experience and have got things that they want to share with you today. But actually, the first time any of us understand what's going to give you the biggest benefit is the time that you ask your first question. So I've said we're going to keep the questions brief, we're going to keep the answers brief, we're going to come out to you. So again, I've already seen on Slido, there's some questions already coming through, so thank you to those of you that have put those through. We're not going to go to those right now. I've got a few, first of all, of course, I want to give the panel a chance to introduce themselves. So we're going to start at the far end. Inez, tell us a little bit about yourself, maybe give us a few reflections on the B2B world, maybe even some of the things that Abhishek has said.
Happy to. Good afternoon, everybody. Sorry for my voice. My throat is not working as I was hoping it would be. My name is Inez Berkhof. I'm the Vice President EMEA for TreviPay. TreviPay is a B2B fintech company. We support companies that are digitizing their order-to-cash process. So everything from onboarding a business customer all the way through to risk management, AML, KYC, processing transactions, and sending out invoices in a white label fashion up until collections of the amount that are owed.
Great, thank you.
In a nutshell.
Kevin.
Hi, I'm Kevin Baker. I lead the merchant services team in EMEA for Bank of America. We've been in the region as a bank for over 90 years, and we set up our merchant services solution back in 2015 to service our global customers that had merchant services and acquiring needs outside of the US. Something I picked up on Abhishek's presentation and also earlier today with Chris from MasterCard and others is the theme of, while it's important to look at what's next and what we're innovating and what's coming down the road in the next few years, I think it's equally as important to focus on the powerful tools we have now and making sure we're unlocking the potential of those and really leveraging them in every way we can. Whether it's cards, which they've existed for decades, or ERP systems, internal accounting systems, powerful consumer payment gateways, right? These all exist, but I think there's so much more room to use them together, which is something I've really picked up on through multiple presentations today.
It's very, very helpful. We'll come back to some of that in a question. Sami.
Hi all, everyone. I'm Sami Karhunen. I'm CEO and co-founder of Pinecone. We are two and a half years old startup, and we are focused to SEPA request to pay. Very shortly, SEPA request to pay is a messaging layer on top of the European payment or financial infrastructure. It is use case agnostic, it is currency agnostic, and it's payment method agnostic, and it works for both ways. So basically it connects the payee and payer, merchant and customer, and it works as a foundation for new payment methods and e-invoicing services in Europe.
Thank you. Fiennes, lovely to have you here.
Yeah, hi everyone, my name's Fiennes Davey. So I'm responsible for group payment strategy at Kingfisher. So Kingfisher is made up of some familiar brands to you, which will be B&Q and Screwfix in the UK. And then in Europe, it's Brico Dépôt and Castorama. So very much sort of in the DIY side of things. And before that, so I spent a few years at WorldPay before I jumped over the fence to the merchant side and worked across product, strategy, risk and operations there. I suppose in terms to pick up something on your talk, actually, one of the first things you said is from the merchant side relating to, well, if you're gonna put something on your corporate card, then we'll give you the speaking slot alongside the drinks and the fees that come with that. So that's what sort of stands out really to me on the merchant side.
Great. Well, look, I've got a whole host of questions for these guys, but as I said before, let's keep those questions coming. I've already got a few of those in mind to put to the team in just a moment. But look, Kevin, I'm going to come to you first, because like some of the things you just said there, I think are absolutely core to how we help merchants move things forward. In these sort of environments, we can get so far ahead of ourselves and going, it's all about this whizzy, wacky new thing. And we're seeing that most merchants, particularly with the current economic crisis, are focusing in on how to do more with what they've got today. So if we're trying to see to get this, what's been commonly a B2C consumer payments, working well with the area we're talking about now, B2C. How do you see that working? You're sitting right at the center of this as a bank, as a processor, acquirer. Give us some of your reflections on that.
Yeah, of course. So some companies we work with are born digital, we like to say. They're born to scale. They might be e-commerce companies. They can very nimbly move around, go to market in new regions or commercialize new products. But other more established traditional companies that might have legacy systems, legacy processes, they still have a growing workforce of technologically savvy decision makers that frankly expect experiences like they have at home as a consumer. Or, especially with payments, they're used to paying in a certain way, so why not at work as well? So it might sound simple, but that's the way people are thinking as we talk to our clients. And, to answer your question, we see probably 2/3 of our consumer, our typical consumer clients that also have some sort of B2B e-commerce interface or catalog, and it operates very similarly to a consumer marketplace or website. So they might start with accepting things like digital invoices, or how can we receive money from our small buyers more efficiently, just like we might receive money from a consumer. And I think that's really the blend we're starting to see of let's start small. We're already accepting payments from consumers. How can we leverage that technology to also accept payments from buyers?
Great. Inez, like an organization like TreviPay is pretty specialist in this B2B world. But I guess that must create some challenges as well. Like you are coming in from our B2B specialism and trying to get your solutions sitting alongside what's been going on in a traditionally B2C world. How do you blend that? And I'm particularly interested in, I know you've done some research on what buyers want. Any reflections on that to help work out how this landscape's going to develop?
Yeah, it's a great question. I think you're right. We want to mimic the B2B world and experience in the B2B world, right? But at the same time, the needs of a B2B buyer are totally different than the needs of a B2C buyer. So for example, and Abhishek talked about it, right? The mid-size and the larger corporate companies that purchase, right, from a merchant have their specific needs in terms of their ERP systems, their PO policies, what have you not, right? So that is really what makes it so different on the B2C side, on the B2B side. So we did indeed do some research on that, and we came to the conclusion that there is definitely a need to bring the slick B2C experience, if you will, to the B2B world, but the buyers want to keep their old-fashioned, if you will, requirements that makes their life so easy on the accounting side, and that's what we're trying to accomplish here. So make it slicker, nicer, more sexy, if you will, but do not forget about the needs on the accounting side and on the administrating side.
Interesting. So I'm going to bring Sami in here, because Sami, you were beginning to outline some of the request to pay model and how that might work. If we're trying to make this slicker, how have you found that bringing a new, fairly innovative solution to market has been accepted and introduced? Are you starting to still feel some resistance to it? How do you see this moving forward and bringing new innovation into the sector?
The start has been, of course, quite slow, but we have seen good signs recently. So But yes, the request to pay can be like bring in lots of new benefits for corporates accounts receivable process. Because nowadays when you, often most of the e-invoicing systems are like black holes. You send the invoice and then you hope. But with request to pay, you combine the invoicing data and the payment data, and you send the invoice and you will receive immediate response whether the invoice is successfully delivered or not. And when the invoice is verified, you get status update that the invoice is verified. When the invoice is approved, you will get status update that the invoice has approved. When invoice has paid, you get the information that invoice has been paid. And because the request to pay includes the payment data, then the tracking the payment is very easy, because the payment data is not created by the payer financial system or by bank. It is the data the company has sent. And if you have all this data, you can automate processes. And if you can automate processes, you can use AI as well. So to get one benefit, you activate another benefit.
Very useful to have that reflection. Now, Fiennes, like, you're the merchant in the room. So I'm really interested, and actually, to be really honest, like, they're quite interested in what these other guys have to say, but they're really interested in what you have to say. So what do you see as the most compelling thing that's maybe not keeping you awake, but driving you forward when you look at, compare your B2C world to your B2B world?
There's an obvious answer to that question, Paul. And I want to try and quickly tie some of what they've said together, sort of, which brings us to that. I mean, I'd love to ask how many merchants we've got in the room, but I can't see hands with all these lights anyway, just to know the audience I'm preaching to. We're talking about innovation, talking about making it slicker, bringing it closer to sort of what B2C payments looks like, and look, I'm absolutely all for that. I'm all for innovation and improving things. And tying as well to what the top question is currently on Slido, right, which is about costs. Now, innovation has to happen, granted, true, but we need to make sure that these things aren't running away from us. I can't remember if it was a talk or a conversation earlier saying how, I think it was a talk earlier this morning, we need to make sure that we're not sort of letting innovation get too far ahead of itself, that we're not concentrating on what's actually happening today. Now, costs is the main thing. When we talk about innovation, making things slicker, to me what that suggests is almost, it makes me think of SCA, right, which has just obviously come in the last few years, and that's designed to be innovative, in some senses make things slicker when you look at exemptions and everything. But on a merchant side, that just increased costs. That's what happened, right? And when we start looking on the B2B side of things, costs are already sky high. Frankly, I'd like to give you guys some figures from the merchant side, for those of you who may not be too familiar with it. 2020 to 2023, our B2B traffic increased by over 50% in the UK. Our interchange fee related to that also increased over 50% in the same period, which means in 3 years, our costs increased over 240%. So when I start to hear of innovation and making things slicker, therefore probably new tools, new products to achieve that, that then also means more cost. So for me, the underlying thing is, let's address the costs now as part of the innovation in the future.
So just want to build that, and actually looking at the questions, kind of keen to crash together probably 2 or 3 of those top questions. Some of this, the costs are fees, but I'm also particularly keen to look at the regulatory landscape, because it's very easy to kind of bash the card schemes, but actually the regulatory landscape, when you've got that quite distinctly and almost artificial split between what's going on a personal card and what's going on a corporate card. Again, we heard it in the previous, the PSD2 session, the merchants saying, we want to repeal the surcharge ban. How do we move forward? Because yes, some of us can help reduce your costs, but actually there's a big influencer world out there of legislators, regulators, standards bodies, whatever, that we need to be influencing. Again, some of the questions that came through in the previous session where regulators don't understand this space very well. So how do we help move that forward to help improve your costs? Any thoughts on that?
I would love to see more engagement. I mean, I know you're personally very involved in it for one as well. But when you obviously go back to 2015 and the interchange caps on consumer cards then, but I mean, to my knowledge at the moment, that wasn't addressed on the commercial side, so we need to see that. I mean, a fact that kind of astounded me in the last week, sort of looking in ahead of this, was the UK Supreme Court ruled in 2020 that interchange fees on the whole were, and I'll try and get the language right, but I suggest you probably go look it up in case I don't. It was anti-competitive, and I believe that was the word unlawful there. And the fact that there's then not been any progress in the last 4 years, I personally find quite baffling that the UK Supreme Court can say this, and then from a regulatory perspective, and I think from the government side of things, we've not had as much engagement as we would like. It's not to say it's not happening, but probably not quite as much as we would like.
Yeah, I agree. And my call to action to every merchant in this room is don't in 3, 4, 5 years' time say, oh, this is terrible, we're now faced with the PSR, we're faced with PSD3, it's not really what we want. You've got to get out there and have your voice. Now, what we've heard from Abhishek is that actually the schemes are certainly recognise that there are things that they can bring. And Abhishek, I'm really keen to hear from you. Obviously, we heard your presentation, but how would a merchant engage? Do they engage directly with Visa in terms of improvements and benefits from working capital, cash flow improvements? Will you be cascading things through the acquirer, processor, gateway world? How do you see that working?
So I think there's a recognition in terms of awareness that needs to be built in the industry. And I think one of the things that we've done is actually gone out and got some fairly serious independent research done. So for example, we actually had Forrester independently, obviously we paid their bill, but Forrester independently actually do a research on the value of commercial card acceptance. And we have a similar research done around Latin America as well. And what's actually interesting is that that independent research came back and said that there is actually almost 300 plus basis points of value to be had when a merchant actually accepts card. It takes into account factors like incremental revenue, reduction in operating costs, fraud risk, collections, delinquencies. So if you start adding all of these benefits up, there actually it far exceeded the cost of acceptance that we look at. Now obviously we can look at in terms of cost versus only focus on cost, but relative to the value, we've actually found that, again independently by research, that there is actually significant value to be had. So what we've started to do on the engagement side is we've actually started to take this message out, directly to some of the largest B2B corporates out there. We've actually started partnering with the acquiring, ISV and other communities, right, to help arm with this information, because education is a key to increase this awareness. Now, does that hold in all the cases? Absolutely not, right? So we've actually launched some fairly innovative programs out there. We have launched flexible economic solutions that can actually help tie, the value of acceptance to the value actually that's received by the corporate. So we've started to address, people think that the schemes have interchange, right? The interchange actually accrues to ultimately the financial institution, and then in return to the actual corporate who's actually making to use that payment. So all the parties actually need to come together, but we as a scheme are starting to launch innovative products and solutions. We've launched actually a BPSP program that allows the PayFac entities to come in and actually help flex economics from the buyer to the supplier as the demand might be. So our focus is really to put out solutions that help facilitate this equilibrium and really help drive the benefits that the network products can have, especially around risk, fraud, working capital.
And so just on that, just dealing with this latest questions, how's Visa partnering with pan-European acquirers to deploy B2B solutions? Because again, we're seeing quite good integration of the different relationships, stakeholder relationships in the B2C world. They're perhaps less well established, although I'm going to come to Inez about some of this in a moment, but I'm keen to see how an organization like Visa, who's got an established relationship and a position of authority within the industry, how are you trying to bring the benefits of that relationship out to the rest of the community?
So it's actually a very relevant and pertinent question. In fact, with my team here in Europe, right, we've actually now built out a presence and are working with the acquiring teams that we have to engage the community to say, okay, how are you thinking about B2B payments? What's your awareness level, right? And in many cases, they have actually started thinking about saying, oh, it is actually a big opportunity area. The demand from the corporates is also large. So we are in early steps of that journey because it's relatively new. This muscle is relatively new for Visa and the industry itself. And so what we are now doing is actually building a forums around it. So in fact, we have actually a forum of some of the top acquirers here coming up in a couple of months where we want to sit down and engage with them around the topic of B2B in terms of what can we provide you, what awareness solutions, what tools that we can provide you, and what are some of the challenges they are hearing from their clients that Visa can help address. So those are some of the things that we are looking to do.
Great, thank you. Now, Inez, you, as I said before, you're a specialist organization in this particular area. In terms of working with acquirers, with schemes, but also looking across different payment acceptance tokens methods, how are you taking that into the market, and how are you seeing these working relationships work? Are you seeing, as one of the questions said, are there any particular payment types that are ideally suited? Are you seeing more of a growth in B2B payments as opposed to cards? Is that just a oversimplification of things in that you're seeing slightly different things by different merchant market sector or different geography? Quite a lot of questions there, but try and tackle those.
I think what you just said is what we see in the market. So there's differences in geographies, there's differences in industries, there's differences in segments. I don't think, and probably everybody agrees, that there's no one size fits all, right? A merchant should offer options in terms of payments, right? Because not every buyer has, the same needs from a payment perspective. What we see is that traditionally in Europe, pay on invoice is the way businesses do business together, and it's what we're hearing is that it sounds maybe crazy, but the invoice and the payment is another touch point of the merchant of interacting with their customer. So we see payments as a method of creating loyalty, right? So I think there's room to think about which segments do you want to have that loyalty and that relationship with. That probably requires a different payment method as opposed to other segments that interact less frequent with you, or for smaller amounts, for example. I think that is an element as a merchant that you may want to balance and think about.
Kevin, any reflections from your side on that?
Yes, I think digital invoicing, we call it, is something we also see. And in Europe, that remains the focus of many merchants. So we don't need to go all the way upstream and start talking about ERPs necessarily. Even allowing merchants that we speak to every day to digitize their invoicing process, to give them reconciliation reporting tools, to give them access to data to see who's paid, who hasn't paid, automatically chase them. Those things are changing the way we do business. And I think it's very important to know the merchant that you're working with and what their needs are, rather than just throwing everything you have at them and saying, we think all of this will help.
Mm-hmm.
And maybe this is an unfair question, but I'll put it out there. Obviously, we're dealing with a lot of B2C suppliers. They're in that zone. That's where they're going to make their business model. That's their strategy. Are there opportunities for them to become competitors with TreviPay? Should they be thinking more? And maybe it's the solutions providers, or is it the, I don't know, web store providers, not to pick on any names for any specific reason, but the Shopifys and people like that think predominantly, I guess, in a B2C world, should they be doing more and integrating more and working with each of you more in that sort of way, so that Fiennes has got a set of solutions that he can go to on the inbound side that doesn't just look like a B2C style solution? Any thoughts on that one?
Yeah, I mean, I think it's a great idea. It doesn't look that different. Again, especially with smaller businesses, there are certain global e-com players, right, that pivoted from operating consumer marketplaces to more B2B marketplaces just to sell goods between two small businesses. So I think if you layer on some of the benefits like reconciliation and data that I talked to, that alone is enough to really differentiate when it comes to the way that small businesses and medium-sized businesses are currently trading.
Well, we're down to our last sort of 12, 15 minutes now, but I want to make sure that we deal with any more questions coming through. Let's keep them coming. Fiennes.
There is a question I'd like to pick up on. It's going to the bottom, so I need to just stretch to see it. Around someone asked a question, if you could share one argument as to why cards should be used in B2B instead of other payment methods, what would it be? Now, I don't know whoever asked this question if you're looking more kind of the inbound and the outbound side in a sense, but to sort of cover it from my perspective and to bring it back to this innovation point, I think one of the problems we've got between what's available and the cost side of things, which I will keep going on about, being my merchant perspective, is when you're paying for, say, the hotel here and you're using your corporate card, there's not really another option at the moment. I was having a conversation yesterday with an open banking provider. There's not like open banking for corporates at the moment, which would provide that competitive environment that would help bring costs down without potentially any need for regulatory involvement, right? Which is healthy for the environment as a whole. And I sort of want to pass this general point over to you, Abhishek, just to get your thoughts on sort of that kind of innovation and how introducing more competition to the landscape will generally benefit all, in terms of competition is great for you guys, that's how it works, great for us in terms of costs and options, and then also great for the consumer as well at the same time.
Great question. I love it when the panelists just get on with it and I'm out of a job. So Abhishek, pick that one up.
Yeah, I think, so that's absolutely fair, right, in terms of the lack of alternatives, right? And I think if you think about some of the intentions around the innovations that are happening in the industry. So there was a session earlier today on open banking. And to your point, right, and I forget the speaker there, I think it was from a consulting firm, he said, hey, everybody thought open banking would be the way, but it's actually just not delivered the value that it was promised, right? People think about RTP. Yes, it works on, peer-to-peer, but when you talk about B2B, right, it doesn't work, right? And there are risks associated with how many times will you actually stand up and say, okay, for my 4 nights here, here's 1,000 euros, right? Boom, tap it out, right? Oh, by the way, I sent it to the wrong hotel. Sorry, you're out of it, right? So there are some challenges that exist in the rails today that, again, we as Visa fully support. For us, right, we have partnerships with everybody and around different rails, right? And I think we are fully embracing that. We ourselves have actually launched a few new rails around it. So I think it's not lack of alternatives, but I think it's the fact, and it's like a shameless plug here, but I think from the network perspective, the scheme that's been evolved, right, over the last 60, 70 years, right, has addressed some of the core challenges and needs. And obviously, we've talked about some of the alternative schemes that have come up, right, in different regions and different countries. Those are great, right? And again, we are figuring out how to partner with them, how to support them. They have their own pros and cons, right? When you think about, cross-border, when you think about risk prevention, like I'll take the example of a scheme, whether you look at India or whether you look at Brazil, right? Those are great, they're very popular. But what? There's no risk prevention, there's no fraud controls, there is no recourse, there is no reconciliation, right? So, and I think as innovation comes in, right, those are the things that will probably help drive some of the elements around. But we on our side are continuing to innovate. I think one of the questions here is what are we doing around automating AR processing? And just to take on it, I think with commercial payments, we've actually advanced AR automation and processing. So in October last year, I actually announced on behalf of Visa the launch of the Visa AR Manager. So in a stroke, basically we've automated the virtual card processing for all merchants. So today it's actually a broken process, and you have to actually go and probably hire a third party, which again costs. So this is something that we actually did in innovation. It's a fee-free service, by the way. Visa launched a fee-free service. I wanted to be on the record. So it's actually free for any merchants to use, right? And it can help automate virtual card receipts from any issuer, any of their buyer. And it comes with automated reconciliation. So that's some of the things we are doing to again continue to add value till kind of the alternatives take place.
Great. Well, look, we're down to our last 7 or 8 minutes, and MPE has just put out on the Brella app, it's happy hour, drinks and mingle. So ignore that. Stay here. Lock the doors. Let's just deal with some of these quick questions. 30-second answers. We've kind of touched on the payment types. Cards are there, open banking's there, invoice payments, direct to bank there. We'll deal with that. The different payment domains, if we did separate things out, banking, merchants, merchant payments inbound, merchant payments outbound, and set the regulators a challenge to, instead of saying the banks are going to be liable as if they only understand what goes on in the banking world, and they say we saw with SCA, the banks have to decide what is going to happen, and they're going to tell the merchants, because I heard somebody in the last session saying the merchant community wasn't ready. Well, actually, the legislators had told the banks what to do, and the issuers tried to tell the merchants what to do without actually knowing what was going on there. So I'm wondering whether having these separate distinctive groups might be worthwhile. Does that work, or was I just painting too simplistic a view of the world? Any thoughts on that?
Personally, I don't think it's uncommon that if you just look at the structure of how this is managed in companies today, they are probably quite separate, completely separate teams who don't touch each other. Like, personally, I know the inbound side of things. I'm really not that familiar with the outbound side of things. Yep. And so I think it leans into how businesses are actually set up to deal with it today.
I think we need to explore that a little bit more, not in this session because there's drinks outside, but I think we should be saying to the regulators, to others, this is how it operates, because I think I'm finding in the merchants we're working with, the payments bit, even the inbound payment bit, can be spread across 10 different areas: fraud, innovation, front of store, e-commerce, PCI, and it's just so different. Abhishek.
Yeah, so I think what I would say is, from a regulator standpoint, I think there's an opportunity definitely for regulators to step in, right? But I think more than price control, I think they need to look at what are some of the core challenges around it, right? And standardization is something that is really imperative for them to look at. If you look at and let then the rails actually compete against each other, right, to provide credible alternatives, and that will actually drive innovation. Now, if you lock, ACH at 10 cents, and I'm taking this purely as an example, right, it can actually never grow in the value. So guess what? The value that it will always deliver will be 10 cents. You're never going to deliver $1 of value or €1 of value for something that you can only get 10 cents, right? However, there is an opportunity to standardize payments, standardize reconciliation, standardize the processing mechanisms, right? And those, I think, so that's where I think the e-invoicing, right, standardizing e-invoicing, I think those are the areas where I think, I would encourage regulators to actually step in and actually think through, because that drives costs for all of us.
Thank you. Right, I promised these guys we had some great preparation sessions. I hope it's coming across that we did some preparation before we arrived here today. But I did promise these guys that I'd let them wrap up, 30 seconds each, just to give some messages to you in terms of, if they were in your shoes, going back to the office on Friday or maybe Monday, what would they be suggesting that you do? I'm going to start with Inez, and we're going to go down the team, and we'll take it from there. Inez, what's your main message to these guys here?
I think I would stick to what I just said. Think about who are your customers, right? And segment them and think about what each of those segments need from a payments perspective. It's not going to be one size fits all.
Right.
And then make a pick and choose the ones that suit your customer base. That's what I would say.
Thank you. Kevin?
I think it's clear to us there's an immense amount of investment and growth in the B2B space that's really just now starting. And I think it's important as an organization to keep in mind as you're looking for what technologies, what platforms to invest in, to keep in mind flexibility. I think it's important to, as Inez said, focus on your strategy, what's important to you, what are the outcomes your organization are aiming to get to, and to ensure that the technology that you choose is able to adapt in the future to enable you to more easily continue to digitize and adapt, if that makes sense.
Right, yeah. Sami?
I agree what Inez said. So discuss with your customers and also talk with your vendors, with your payment service providers, with your bank. Try to also to have your knowledge level higher than ordinary people, because you need to seek the information and listen customers.
Great. Pines?
Really, I'd say it's kind of echoing what I said earlier, being really keen on innovation in this space. I think there's probably an awful lot that can be done. Just kind of make sure no one either gets left behind or at the same time no one foots an enormous bill as a result of it, which is, from a merchant perspective, that's so much of the concern.
Great. And Abhishek?
Thank you for your time. Go hit the drinks.
Well, look, let's give a big round of applause to these guys. Thank you very much.
Thank you.
Just before you do hit the doors, then I would like to say thank you too for you being here. If you're not racing to the doors as soon as the MP guys told you to go and grab some drinks, I'm hearing some really consistent messages. This is difficult. This requires real collaboration. It requires collaboration between your solution providers and yourselves. It's not just a technology issue, it's about processes. As Fiennes says, there are many people involved in the business. It's an area of opportunity, I think. Organizations that have been focused on predominantly a B2C channel should be lifting their heads up to the wider market to see where the wider opportunities might come from. There may be whole new markets that you could attract. These guys are here to help. I know Bank of America's got a stand out there, Visa's got their hub, but please, before you go and grab the drinks, make sure you do check these guys out. Check them out on LinkedIn, come and speak to them now. We're taking these issues forward. I've kept a note of these questions because we haven't been able to deal with them in any depth during this session today. We want to make sure the real answers come to help you on your journey with B2B payments. Thank you for being here and enjoy your evening. You are free to go. Thank you.